Inflation, bank collapses, the debt ceiling, and now a looming recession. Fallout from all of these economic crises have Americans super uneasy about their financial security. So here to put our minds and our wallets at ease is chartered financial analyst Tim Baker, CEO of Metric Financial in Simsbury. Tim, always good to see you. Thank you so much for joining us this morning. We've had a lot of these conversations over the past year. We've seen the Fed raise interest rates to stave off inflation. Fears about a possible recession. We talk about a recession. What is a recession? Because we hear so many different definitions about this.
Yeah, technically speaking, a recession is 2 consecutive quarters of negative GDP growth. Technically speaking, we had that back in 2022, but it was never actually called a recession. There's a research foundation that actually calls a recession, and the jobs market was just too strong for them to actually call it a recession. So the economy was shrinking, but everybody had jobs, wage growth was high, so they never technically called it a recession.
And that brings us to this back and forth that we've been seeing. Are we in a recession? Are we not in a recession? What's your take on that?
Yeah, I just saw an article the other day that said we're already out of it. So it's whether or not a recession comes is very difficult to predict, just like anything else. How's the stock market going to do? Where are interest rates going to be? Are we going to go into a recession? The jobs market is very, very strong. So even if we go back into a recession, it may be another weak one. But again, it's very difficult to say whether or not you're going to wind up in one and if anybody will actually call it one. The one thing I will say that I worry about a little bit is you are starting to see a pretty big uptick in jobless claims. And that could spell a little bit of trouble for the jobs market, but we'll see how that shakes out. The important thing for investors, I think, is if there's a recession, it's very difficult to say how stocks will react to them. Obviously, the stocks are doing very, very well this year. Bonds are about flat, so it's certainly been an improvement over last year.
And what would a recession mean for the everyday Connecticut resident?
Yeah, unfortunately, it means job losses, right? I'm already starting to see some of that a little bit. We've had a couple of clients that came to us in the last week or so. Either they got laid off or their partner got laid off, whatever it might be. But that's the really big challenge. But like I say, it's very difficult to equate those things to behavior in the financial markets. This is why we don't make predictions or forecasts. You know, we build everything for clients based on financial goals, not noise in the day-to-day. Because again, if you look at the track record of stocks during recessions, it's very, very mixed.
A lot to follow on that front. Also want to talk about Wall Street, this sudden craze everywhere. AI, big tech, we're seeing that reflected on Wall Street. What are these big tech stocks that we're seeing?
Yeah, it's been an exciting year. So interesting statistic for you. The S&P 500 is up about 13% this year. The Dow Jones Industrial Average is up less than 2%. The NASDAQ, the big tech companies, are up 29% this year. We actually use an ETF to capture technology stocks that own the top 100, the biggest 100 in the NASDAQ. That's up 36% this year. So it's all been based on this big AI craze, the artificial intelligence. NVIDIA had blowout earnings. They're the 3rd largest stock in the ETF that I just, or company in the ETF that I just mentioned. It's been a really exciting year for technology companies. NVIDIA was basically the first one to say, here's a dollar amount on AI.
You mentioned ETF. What exactly is that?
Sorry, exchange traded funds.
Gotcha.
I always joke, friends don't let friends buy mutual funds. We use exclusively exchange traded funds, index-based exchange traded funds. They're significantly lower cost and tend to have better performance than traditional active mutual funds.
And we're getting a wrap, but really quickly for the everyday investor out there who's trying to understand all this, what's your advice to them as they navigate this kind of new world of AI and big tech?
Yeah, stay put. The big thing that I've always said about AI is people are looking at this right now as a big play on technology. My argument is going forward, this should be a broader opportunity. It's not necessarily the technology, but how and when and if companies apply it. We apply it in our business. If people aren't applying it in their business, I think it's going to be a major problem for them. But traditional companies like Ford, Honeywell, they could all be AI plays as long as they're using AI to build their business.
We'll have to see. Tim Baker, thank you so much. Appreciate it.
Thanks for having me.
As always. The time now is 8:48. Let's get you a check on the weather. For that, we are saying good morning.